10 types of stocks available on the market. Investing can be defined as the act of putting money or capital towards an endeavor with the intent of making a profit or gaining another source of additional income. In other words, it is a way to make your money work for you as you live out life. Moreover, when done correctly, it can serve as an additional source of income. Unlike being a consumer, which is also a means to a happier ending, being an investor allows you to create opportunities, help other people, raise the economy, earmark money in several vehicles in the hopes of increasing your wealth. Before you begin your journey as an investor, you must identify the category of investor in which you fall in. Will you invest passively? Will you invest actively? Are you a speculator? Do you consider investing for retirement only? As you set up your brokerage account, most, if not all, brokers will ask you a series of questions about your investment goals and risk tolerance in order to better serve you and to provide you with the necessary tools and services in order to help you safely reach your destination. In most cases, investors tend to be very hands-on with the management of their assets as their wealth increases. In other cases, most prefer to put money in the market and to once in a while check back on their portfolio to see how well or how bad it has performed over time. Both forms of investments mentioned earlier allow you to invest in stocks, bonds, exchange-traded funds or ETFs, index funds, and mutual funds. Dear future entrepreneurs and moguls, here are the 10 types of stocks you will come across while shopping on the stock market. Number 1. Blue chip stocks. Blue chip stocks are the stocks in a corporation with a national reputation for quality, reliability, and the ability to operate profitably in good and bad times. These companies have stood the test of time and have gained the respect of their customers and their shareholders. They often make regular and growing dividend payments. With solid business models, blue chip stocks have produced long records of attractive returns, and that's made them among the most popular individual stocks in the stock market for conservative investors looking for places to put their money to work. Some examples include Apple, AAPL, Berkshire Hathaway, BRK.A, BRK.B, Coca-Cola, KO, Johnson & Johnson, J&J, Walt Disney, DIS. Number 2. Income stocks. An income stock is the stock of a company that pays a dividend to its shareholders. Dividends are payments typically in cash that companies send to their investors regularly, often quarterly but sometimes even monthly. Dividends represent a portion of the business profits. Unlike growth stocks, which investors buy primarily for capital appreciation, which is an increase in stock's value, income stocks help you earn a yield on your investment. The best income stocks can increase their cash payouts over time, which can result in a sharply higher income stream for most investors. Some examples are utility stocks, Waste Management, WM, Verizon Communications, VZ, which are of course known to pay competitive dividends. In addition, preferred stocks, Pennsylvania Real Estate Investment Trust 7.20% Series C, PEI-PR-C, Mitcham Industry Inc. 9% Cumulative Preferred Shares Series A, MINDP are another source of income stocks. Number 3, growth stocks. These are stocks of a company that generate cash flow and whose revenues and earnings are expected to increase at a faster rate than the average company within the same industry. More than often, a growth company has created several products or services that are rising in popularity and are gaining shares in existing markets, entering new markets, or even creating entirely new industries. Businesses that can grow faster than average for long periods tend to be rewarded by the market, delivering great returns to shareholders in the process. The faster they grow, the bigger the returns will be. Unlike value stock, growth stocks tend to cost more than the average stock in terms of metrics like price to earnings, price to sales, the price to free cash flow ratios, and some other things. Some examples include Shopify, SHOP, Alibaba, BABA, Square, SQ, Mercado Libre, MELI, Facebook, FB. Number 4, tech stocks. Tech stocks refer to any stock involved in the technology sector, from semiconductor producers to software providers. Before rising to popularity, tech stocks used to be seen as speculative picks by investors of all backgrounds, high reward but equally high risks. However, with technology's growing influence across various aspects of society, as well as the maturation of numerous companies, the investing sphere concerning technology has widened up very well and has started to attract more investors. Now, technology stocks can compete equally with blue chip stocks, and in some cases, they'll even offer reliable dividends with decent yields. Tech stocks are often a leading indicator for the economy and the stock market. Some examples include NRG Energy Inc., NRG, Vornado Reality Trust, VNO, Square, SQ, MGM Resorts International, MGM, Zoom Video Communication, ZM. Number 5, speculative stocks. A speculative stock can be defined as a company that is characterized by extreme risk with the possibility of extreme returns in compensation for that risk. The fundamentals of the stock do not show any apparent strength, thus implying an unsustainable business model. The trader expects that such stock may one day come about for one reason or another. These stocks are typically traded on the over-the-counter markets instead of the formal exchanges such as the New York Stock Exchange or Nasdaq Exchange. Many traders and investors are drawn to speculative stocks due to their higher volatility relative to blue chip stocks, which creates an opportunity to generate greater returns, albeit at a greater risk. Most long-term investors and institutional investors tend to stay away from speculative stocks unless they are part of a mutual fund or exchange traded fund (ETF). Some examples are Beyond Meat, BYND, Canopy Growth, CGC, Kronos, CRON, Uber, UBER, Nvidia, NVDA. Number 6, cyclical stocks. Cyclical stocks are stocks whose fortunes swings as per the business cycle of an economy. A cyclical stock typically moves up or down depending on the upward or downward movement in the economy. Cyclical stocks are known for adjusting well with the cycles of an economy: expansion, peak, recession, and recovery. Most of these stocks involve companies that sell consumer discretionary items that consumers buy more during a booming economy but spend less on during a recession. Cyclical stocks usually have higher volatility and are expected to produce higher returns during periods of economic strength. Moreover, cyclical stocks are generally the opposite of defensive stocks. Cyclical stocks include discretionary companies such as Starbucks, SBUX, or Nike, NKE, while defensive stocks are Staples, SPLS, and also Campbell Soup, CPB. Defensive stocks. A defensive stock is a type of stock that provides consistent dividends and stable earnings regardless of the state of the overall stock market. With their products being in demand, defensive stocks tend to be more stable throughout the various phases of the business cycle. Defensive stocks should not be confused with defense stocks, which are the stocks of companies that manufacture things like weapons, ammunition, and fighter jets. Defensive stocks offer the substantial benefit of similar long-term gains, with lower risk than other stocks. On the downside, the low volatility of defensive stocks often lead to smaller gains during bull markets and a cycle of mistiming the market. While established companies such as Procter & Gamble, PG, Johnson & Johnson, J&J, Philip Morris International, PM, and Coca-Cola, KO, are considered defensive stocks. Number 8. Small cap stocks. A company's market capitalization is the market value of its outstanding shares. The definition of small cap can vary among brokerages, but it is generally a company with a market capitalization of between $300 million and $2 billion. Since the share prices of these companies can have big fluctuations over a short period of time, companies with market caps of up to $10 billion are also found in the small cap universe. Small cap stocks are as represented by the Russell 2000 Index Fund, or RUT, have underperformed the broader market, providing investors with a total return of negative 4.6% compared to the S&P 500, total return of 8.9% over the past 12 months. Some of the stocks classified as small cap include biotechnology companies like Akero Therapeutics Inc., AKRO, Tupperware Brands Corp., TUP, and cloud computing businesses like Fastly Inc., FSLY. Furthermore, Unisys Corp., UIS, X Biotech Inc., XBIT, Telos Energy Inc., TALO. Number 9. Large cap stocks. Historically, market capitalization, which is defined as the value of all outstanding shares of a corporation, has had an inverse or opposite relationship to both risk and return. On average, large cap corporations, more specifically those with market capitalization of $10 billion and greater, tend to grow more slowly than mid-cap companies. Mid-cap companies are entities with capitalization between $2 billion and $10 billion, whereas small-cap corporations have between $300 million and $2 billion. Large caps tend to be more mature companies and so are less volatile during rough markets, as investors tend to fly to quality and become more risk-averse. Since large cap stocks represent the majority of the US equity market, they are often looked to as core portfolio investments. These companies comprise over 90% of the American equities marketplace and include names such as mobile communication giants Apple, AAPL, multinational conglomerate Berkshire Hathaway, BRK.A, and oil and gas colossus ExxonMobil, XOM, Freshbet, FRPT, Yeti Holdings, YETI. Number 10. Penny stocks. Penny stocks, also referred to as micro-cap stocks, nano-cap stocks, small-cap stocks, or OTC stocks, are commonly shares of small public companies that trade for less than $1 per share. Penny stocks are a risky investment, but there are some ways to lower the risk and put yourself in a position for more money making penny stocks trading. You can find a few penny stocks on the regular stock exchanges. The companies behind those stocks must meet the exchanges and SEC listing requirements, and they have to trade at a minimum of $1 per share. I prefer the aforementioned OTCBB. Find penny stocks that interest you, then conduct some basic research. Some examples are Force Protection Video Equipment Corp. FPVD, Bentech Inc. BANT, Pedevco Corp. PED, Psionics Corp. SINX, Transglobal Group Inc. TGGI. In conclusion, unlike being a consumer, which is also a means to a happier ending, being an investor allows you to create opportunities, help other people, raise the economy, earmark money in several vehicles in the hopes of increasing one's wealth. Before you begin your journey as an investor, you must identify the category of investor in which you fall in. Will you invest passively? Will you invest actively? Are you a speculator? Do you consider investing for retirement only? As you set up your brokerage account, most, if not all, of brokers will ask you a series of questions about your investment goals and risk tolerance in order to better serve you and to provide you with the necessary tools and services in order to help you safely reach your goal or destination. The end. Thank you.